What if I told you the richest 1% don't play the same game as you? Imagine walking into a casino where the cards are stacked, the dice are loaded, and the dealer whispers secret rules only to a chosen few. That's the world of hedge funds. These powerful money machines control billions of dollars. Yet most people don't even know how they work. Regulators try to keep up, but the truth is hedge funds move in shadows, using tricks and tactics that tilt the table in their favor. In this video, I'm pulling back the curtain. You'll see the exact strategies hedge funds use to grow their fortunes, and why everyday investors often end up holding the short end of the stick. By the end, you'll not only understand their secrets, you'll know how to protect yourself from being the one left paying the price. Welcome to Wealth Pal, a place where future exceptionally successful and wealthy individuals gain an unfair advantage. If you haven't yet, hit that subscribe button and turn on notifications so as to never miss out on a future life-changing video. Without further ado, let's get right into it. Before we dive into the secrets, let's set the stage. What exactly is a hedge fund? Think of it like an exclusive club where only the wealthiest investors are allowed through the door. The entry fee isn't a few $100s, it's often millions. Inside, the rules are different. Hedge funds are pools of money managed by professionals who are free to take risks that most regular funds can't. Now, compare that to something you might already know: mutual funds or ETFs. Those are like public swimming pools, open to almost anyone, with lifeguards, safety rules, and clear boundaries. Hedge funds, on the other hand, are more like private oceans. No lifeguards, no rules you can see, and the waves can be calm one moment and crushing the next. Here's the twist. Hedge funds aren't doing anything illegal. They're not breaking the law. Instead, they thrive in the gray areas, using complex strategies that sound boring on paper but are powerful in practice. Regulators know these funds exist, but the tactics are often so complicated that even experts struggle to keep up. And that's the point. Complexity is their shield. The harder it is for outsiders to understand, the easier it is for hedge funds to move quietly, making billions while the average investor barely notices. So why should you care? Because even if you never invest in a hedge fund, their moves ripple through the entire financial system. When they win big, markets shift. When they lose, the shockwaves can hit your retirement account, your savings, even your job. This isn't about fear, it's about awareness. Once you see how the game is played, you'll never look at Wall Street the same way again. Hedge funds guard their playbook like treasure, but let's open it up. Secret number 1, leverage and borrowed money. Hedge funds love to play with borrowed money. It's called leverage. Imagine walking into a poker game with only $10, but the casino lets you borrow 90 more. Suddenly, you're playing with 100. If you win, your gains look huge. But if you lose, you don't just lose your 10, you owe the 92. That's the power and danger of leverage. Hedge funds use it to multiply profits, but it also multiplies risks. When bets go wrong, the damage doesn't stay inside their walls. It can ripple through banks, markets, and even your retirement account. Big wins, bigger risks. Secret number 2, short selling and betting against you. Hedge funds don't just make money when stocks rise, they profit when they fall. This is called short selling. Imagine borrowing your neighbor's bike, selling it today for $100, then hoping the price drops so you can buy it back for $50 and return it. You keep the $50 difference. That's short selling in action. Hedge funds use this to bet against companies, even entire markets. In 2008, some funds made fortunes as the housing market collapsed. More recently, the GameStop saga showed how short bets can backfire when everyday traders push back. For hedge funds, your loss can be their payday. Secret number 3, dark pools and hidden trading. Most people think all trades happen on the stock exchange, where prices are clear and open. But hedge funds often step into something called dark pools. Picture a secret backroom in a casino where the biggest bets are placed away from the crowd. In these private exchanges, massive trades are hidden from public view. Why? Because if the market saw a billion-dollar order, prices would swing instantly. By trading in the dark, hedge funds move quietly, protecting their advantage. For everyday investors, it means you're never seeing the full picture. The real game often happens in shadows, far from your screen. Secret number 4, insider access without breaking laws. Hedge funds don't always need illegal tips to stay ahead. Instead, they buy access. Picture a Rolodex filled with former politicians, government staff, and top industry experts. These insiders aren't handing over secret files. They're sharing insights, connections, and whispers about upcoming policies or market shifts. It's not technically insider trading, but it gives hedge funds a powerful edge that regular investors can't match. Imagine playing a board game where one player already knows the next 5 moves. That's the advantage hedge funds create. By hiring the right people, they stay one step ahead, while the rest of us are left guessing. Secret number 5, high-frequency trading. Picture a race where one runner drives a Formula One car while everyone else pedals bicycles. That's high-frequency trading. Hedge funds use powerful computers and lightning-fast internet connections to buy and sell stocks in fractions of a second. These trades happen so quickly that a tiny price change, just a penny, can turn into millions when repeated thousands of times a day. Regular investors never stand a chance because by the time you click buy, the hedge fund's algorithm has already moved in and out. It's not illegal, but it creates an uneven playing field where speed, not strategy, decides who wins. Secret number 6, fee structures, 2 and 20 rule. Here's one of the sneakiest parts of hedge funds, the way they get paid. It's called the 2 and 20 rule. First, they charge a 2% fee just for managing your money, no matter how the fund performs. Then, if they make profits, they take 20% of those gains as a bonus. Imagine giving someone your money to invest, and even if they lose, they still collect a paycheck. If they win, they take a huge slice of your winnings too. It's a system where hedge fund managers get rich whether you do or not. Heads they win, tails you lose. Now you might be thinking, okay, hedge funds play their own game. So what does that have to do with me? The truth is, their moves don't stay locked inside their glass towers. They spill out into the real world, touching your savings, your retirement, even the price of your groceries. Here's how. When hedge funds use leverage and those giant bets go wrong, banks and markets feel the shock. Remember 2008? Ordinary families lost homes and jobs, while some hedge funds walked away richer. Or think about the GameStop saga. Hedge funds shorted the stock, betting it would crash. When everyday traders fought back, the chaos shook the entire market. Even if you never invest $1 in a hedge fund, you're still part of the ripple effect. Your 401k, your pension, or even your Robinhood account can swing wildly because of their hidden strategies. It's like being on a boat while someone else rocks the waves. You may not control the storm, but you'll feel it. And here's the kicker. Hedge funds often have safety nets. They can negotiate bailouts, raise new capital, or simply walk away. Everyday investors don't get that luxury. When the tide turns, it's your savings that can sink. This isn't about fear, it's about awareness. Once you understand how the game is tilted, you can make smarter choices. You'll see the warning signs, avoid risky traps, and focus on strategies that actually protect your future. Hedge funds may play in shadows, but their impact lands squarely on your doorstep. By now, you've seen the tricks: leverage, short selling, dark pools, insider access, high-speed trading, and those sneaky fees. It can feel overwhelming, like the game is rigged beyond repair. But here's the truth. You don't need to copy hedge funds to win. In fact, trying to play their game is the fastest way to lose. The first takeaway is simple. Don't chase their strategies. Hedge funds have billions in backup, teams of analysts, and safety nets you don't. What looks like a clever move for them could be financial disaster for you. Instead, focus on what actually works for everyday investors: long-term, steady growth. Second, understand the risks of leverage and speculation. If you're tempted to borrow money to invest, remember the poker table analogy. It feels exciting when you win, but devastating when you lose. Protect yourself by staying within your means. Third, remember that knowledge is protection. Hedge funds thrive in secrecy. By learning how they operate, you take away some of their power. You won't be fooled by flashy headlines or quick rich promises. You'll recognize when the market is being shaken by forces outside your control, and you'll know not to panic. Finally, focus on what you can control, saving consistently, diversifying your investments, and keeping a long-term view. Hedge funds may win some battles, but you're not in the same war. Your goal isn't to beat them. It's to build a future that's safe, stable, and yours. Awareness is your shield. Patience is your weapon. And discipline is your edge. With those tools, you don't need hedge fund secrets. You've got your own. Now you've seen behind the curtain. You know the tricks hedge funds use: borrowing money to multiply bets, shorting stocks to profit from crashes, hiding trades in dark pools, buying access to power, racing with supercomputers, and charging fees that guarantee their payday. These aren't just clever moves. They're the hidden gears that tilt the market. But here's the good news. Awareness is power. You don't need to copy hedge funds. You need to outlast them. Focus on steady growth, protect your savings, and remember that patience beats speed in the long run. If this opened your eyes, don't keep it to yourself. Share it with someone who still believes Wall Street plays fair. And if you want more deep dives into the hidden world of money and power, hit like, subscribe, and turn on notifications. Until next time, thanks for watching and see you in the next video.